A Loan Guide. Loan Guide Introduction. This is about one of the biggest problems of American people, getting loans and paying back the debt. Most people don't understand how interest rates add up. On top of that, all loan interest is compound as opposed to simple interest on the original balance, meaning that you pay interest on the interest, which balloons very quickly. People put down the Muslim religion, but the Muslim religion is good because they say it's immoral to make money from usury, charging interest on loans or at least excessive interest. Muslim banks make loans but charge a minimal reasonable fee, unlike the rest of the world where banks and loan companies want to get people in debt because they make loads of money in interest. If you get a mortgage for a house, say for $100,000, by the time you pay off the mortgage, you will have paid $250,000. The bank makes the original $100,000 through fractional reserve banking by creating the money out of thin air, then makes the other $150,000 through the interest. Books about loans are at number 332.74 or HG 3755-56 at the library. Books about credit repair are at number 332.024 or HG 3752.5. Chapter 1. Loans 1. Loan Guide. Before you go for a loan, analyze yourself to see if you can afford it. In general, only get a loan if you need what you want to buy. Don't get a loan for a recreational product. If the loan payment will end up with you paying out more than you earn per month, don't get the loan. Emergencies happen. You'll fall behind and possibly lose the loan and your collateral. Financial institutions want to make money, but more importantly, they want to minimize the risk of losing their money, which is why they check people out so carefully. Most people who want a loan are self-centered about it. They think that because they've been paying their bills for the past few years they have a good credit rating and the bank wants to lend them money because they will make money on the interest. While all this may be true, the bank is suspicious and conservative by nature, especially for a business loan or a loan for something frivolous. Even if you pay your bills on time, they have the ability to look for exactly when during the month do you pay your bill. Do you pay it promptly or do you wait until near the deadline? If you go past the monthly deadline, by even just a few days, that's considered a non-payment and goes on your credit file. Regular procrastination won't win you any points with them. The trade line is a summary of every loan you have ever taken out on your credit report that says how many times you were late paying your bills, the credit limits or the amount of the loan, the balances, monthly minimum payments, bankruptcies, if applicable, a credit rating for each loan and an overall credit rating. Loan officers are human beings. In addition to having a good credit profile, you still have to have the people skills to deal with these people, to be pleasant in a business-like manner and don't take liberties by being too personable with them. They want you to show respect for them. If you don't, they might not give you the loan just to spite you. In general, the more credit cards you have, the more credit card companies want to give you more because they think you're a good investment and want a piece of your money. If you pay your credit cards off regularly, the credit card companies generally raise your limits because they want to make more money off you. A little-known feature of a credit report is the number of hits, that is, the number of people requesting a copy of your credit report, which signifies how often you're applying for credit, which could be bad because it could make you look like a credit junkie ripe for bankruptcy. If you are rejected for a loan, your best bet is to try to find someone who will be a CO borrower as opposed to a CO signer, because the CO borrower is directly responsible for the money. The CO signer agrees to pay if you default, which is not as strong a commitment to the bank as the CO borrower. Some bankers use a formula whereby they calculate how much of your income you use to pay bills for your house. If it's more than 40%, it's too high for them and they will reject you. An equity loan is a situation where you put up 50% or more of the money of what you want to buy, house, car, etc., then ask for a loan. If you default, the bank gets the asset you borrowed the money for. Even these loans are not automatic. You still have to prove to the bank that you have enough incoming money to make monthly payments. In essence, when applying for a loan, the major things the bank wants are: a record that you have paid debts in the past. Proof of a steady income, namely through steady employment. Before you sign for a loan, do the math on the interest rate to find out if it's true or if there's some kind of error. Do it with a loan calculator or accounting software. Find a friend who knows how to do the math, get a book at the library that shows you how to do it, number 332, or hire an accountant for a few bucks to figure it out for you. There's simple interest and compound interest. There are financial calculators on the market that do it for you. Be wary of all loans. They have many tricks to try to inflate your fee. Ask about all charges. You must check the numbers for yourself. I guarantee that you will be overcharged in many cases by their so-called innocent errors. The federal government has enacted the Truth in Lending Act, which means that the lenders must disclose the true APR on your loan contract clearly with all loan costs included into the equation. If you fall for a down payment ploy or delayed payments, you will end up paying more in the long run. If you get a bank loan for something like a boat or a car, many banks have a clause whereby if your insurance on these vehicles lapses for any reason whatsoever, the insurance company notifies the bank who provide insurance on your vehicle from their blanket policy and slap an extra fee onto your loan. Read your contract. Tide selling is an illegal process of a banker offering you a loan on the condition that you move your bank accounts, mortgage, investments, credit cards, and all other financial affairs to their bank, but it's not illegal if you offer to do it if you think it will increase your chances of getting the loan. Types of loans. When you apply for a loan, the lender will check your credit rating, and if you pass, you will usually get an unsecured loan where the power of your signature is good enough, but sometimes they might ask for collateral, or you could offer collateral in order to get a higher loan than you would without it. You can offer stocks and bonds or other securities as collateral, in which case you can usually borrow only 50% of what they're worth. A collateral mortgage usually means you are using real estate property as collateral, while a chattel mortgage means you are using something that moves like a car, truck, boat, plane, etc. If you don't pay on the loan on time, the lender can take possession of your collateral and sell it to recoup the cost of his loan. Installment loans are the traditional loans you usually get at a bank or credit union for a set number of dollars at a set interest rate for a specific reason, like to buy a car, furniture, new baby, etc. A demand loan might look like this, except that the lender has the option to call it in and demand full payment whenever he wants, and the borrower has the option to pay it all off whenever he wants, as opposed to steady monthly payments, which the lender wants because this is how he makes the most money off you. Retail installment contracts are credit agreements for such major purchases as an automobile, where the buyer agrees to make monthly payments directly to the dealer or manufacturer at a high interest rate, of course. Many stores offer their own financing for the products they sell, like furniture stores and electronics stores. Credit card loans are discussed elsewhere. You can borrow from your credit card at high interest rates. Mortgage loans are loans to buy a home. The government has several loan programs for citizens in different areas like business, Small Business Administration, SBA.gov, student loans, ED.gov, and Housing and Urban Development, HUD.gov. The different types are direct from the government and guaranteed/insured, where the person gets a loan from a private insurer which the government guarantees. There are also several other hybrid programs. You can get loans against your retirement pension plans. Some banks will give you a secured consumer loan collateralized by assets such as certificates of deposits or stocks and bonds. You can get loans on your life insurance policy at low interest rates, especially if you have had it for a long time. If you can join a credit union either through your company or another way, the benefits are generally better than banks, and the interest rates on loans are a few points lower than other financial institutions. Some credit unions will open an account for almost anyone with such loose criteria as you have to have attended a community college or worked for the government at some point in time, so call them up on the phone to see if you can open an account there rather than at a bank. If you have a good credit rating, you can get a signature loan based on your signature alone. As long as you pay it back in time, you can usually raise your credit limit on request. Probably the best deal around when it comes to getting a personal loan are the brokerage houses. Although they don't advertise, many will lend you a certain percentage of the value of your investment account with them, generally around 50%. So if you buy stocks and bonds with a brokerage house and you suddenly need a loan, you may not have to liquidate to get it. They will lend it to you and the interest is deductible if you pay it monthly instead of letting it accumulate. When shopping for a loan, look for a loan officer who's commissioned, meaning that he gets a commission for every loan he signs, therefore he will be more eager to give you a loan over just a salaried officer. Buying credit life or disability insurance when getting a loan are a waste of money. Many banks offer loans online. Refer to the section about online banks and punch the word loan into search engines. Deal with loan officers. Have a good reason for requesting the loan. The likelihood of you repaying a loan for a trip to Europe is not as great as that of you repaying a loan for home improvements, a business venture, a real estate purchase, etc. Prove to the loan officer that your reason for requesting a loan is good and that you are not a high risk. Be honest when the loan officer asks you about your finances, but don't say more than you have to. Don't get angry with the loan officer. He may say no today and yes tomorrow. Be confident and optimistic at all times. Agree with the loan officer on as many issues as you can. People don't like to hear the word no. If you must disagree, use this sales technique. Yes, I understand what you're saying, but... Be calm and collected at all times. Don't be afraid of the loan officer. You will be doing as much for his institution as he will be doing for you. Being afraid will only make you nervous and jumpy. Know as much as possible about the loan before you apply for it. This will put the loan officer on the defensive. Be well dressed and groomed for the interview. Be open to any suggestions or criticism and try to see the situation from the loan officer's point of view. Try to get an officer who works on commission so that he will be more motivated to give you the money. Apply for a loan. The proposal you submit for your loan will determine whether or not the banker will give it to you. Expect the following questions at a bare minimum. How much money do you want? What's your plan with the money? Why do you think this money'll help you get more profitable? When will you pay it back? What happens if your plan doesn't work out? The following formula will show you how to apply successfully for a loan. Cover page. On this page, include your name and address and the names and addresses of any others who are applying jointly with you. This page goes on the front of the loan request and it should contain the title of your request. Letter of request. This letter may be the most important part of your loan request and it will determine if you get the loan. The letter must get right to the point and tell the loan officer exactly what he has to know in 1 or 2 pages. The letter should tell the officer 1. Why you want the loan. 2. How much capital you want. 3. How you propose to pay back the loan. 4. Any personal information that may help you get the loan. Credit application. You may obtain a credit application form from any lending institution. Data sheet. This form, similar to a resume, is very helpful to the lender. It contains background information about yourself and all your personal information, such as name, address, height, weight, marital status, birth date, etc. It also includes information about your past 4 jobs, 3 references, and a complete record of education. Marketing plan for business venture. If you try to get a loan for a business venture, this part of your proposal is one of the most important. The function of the marketing plan is to show the lender what you will do with the money loaned you and how you will pay it back. The marketing plan proves to the lender that you will make a profit. The following 6 steps should be taken when creating your marketing plan. If you have trouble, contact your local SBA office for assistance. 1. Analyze your present marketing situation. In order to project your company's future achievements, you must know where it stands at the present time. In this portion of your marketing plan, analyze your company's financial resources, competitive strengths and weaknesses, organizational setup, market conditions, experience, management capabilities, clientele, channels of distribution, how you will distribute your product, and your competition. 2. Determine your marketing objectives. This step provides guidance and direction for your company. Here, you tell the lender exactly what you want your company to achieve. But remember to be specific and make sure that the numbers can be measured, such as, increase the market share of widgets 10% from January 1st to December 31st. You do not have to know these numbers precisely, but you should make a rough estimate of what your company can achieve. 3. Assess your company's capabilities. In this step, show the lender how you will use your resources to reach your objectives. You must show that you have every resource necessary to reach your objectives, except one, a certain amount of money. In this step, explain past experiences and accomplishments that you, your company or other company officers have had that could aid the future of your firm. Also mention anything favorable in step 1 that may help you reach your objectives, such as your clientele, receivable, equipment, etc. 4. Create a marketing strategy. In this step, show the lender your plan or strategy for meeting your objectives. This may include continuation or revision of an existing strategy or be completely different strategy. A strategy is a complete plan of how you will best use your resources to meet your objectives. List each activity you will perform. It is also important to establish which duties or activities will be delegated to which person. 5. Put your overall plan on a time schedule. In this step, place the activities you have listed in the previous step on a time schedule. List each activity and show how long it will take you to complete. You should also show beginning and completion dates. Do this with all your marketing activities. The lender not only sees what you plan to do but how long it will take you. 6. Control and evaluate your plan. You should have a method of evaluating your process as you follow your plan. You should be able to control all the proposed activities and make sure they are on schedule. For examples, if your objective is to obtain 300 accounts within a 10-mile zone, your control activity will check that you have done just that. The control activity will be a monthly record of the number of accounts you have obtained within the designated 10-mile zone. Financial statements. Personal financial statements of all persons involved in the business venture are important to the lender. Current as well as projected financial statements should be included in the loan request. Projected financial statements are statements that show how predicted sales will affect future financial conditions. It is advisable to have an accountant help you prepare your statements. Statement of capital expenses. This statement shows the lender exactly what you plan to do with the money he loans you. You should itemize how each dollar he lends you will be spent. Real estate loans. Having a professional, independent appraisal of the property is the first requirement. If possible, include pictures of the property as well as maps showing its exact location. Turned down for a loan. If you are turned down for a loan, find out why. It's your right. Request your credit report and be sure it is accurate. Correct any errors on it. By studying your credit report, you should be able to find out why you were refused. Work on your weaknesses and try again for another loan. Don't give up until you get a loan. If you have done all you can to improve your credit rating and are still unable to obtain one from your bank, consider these options. A credit union loan. Often they are easier to get than loans from a bank and the interest is sometimes lower. A source other than your bank. Often other lending institutions have less rigid qualifications for loaning their money, like household finance and beneficial finance. Interest is usually higher though. A cosigner. Often you will get a loan if someone with a good credit rating cosigns your application. Understanding the predatory subprime fiasco. A subprime mortgage loan is perfectly legal. The lender is taking more of a risk by giving someone without a great credit rating a loan in exchange for higher payments. It could be in the fees, in the points, higher interest rate, or at the back end as with a graduated payment mortgage. The dirty little secret is that a lot of these subprime loan officers and mortgage brokers never expected these people to pay off their mortgages. They got their commissions. They expected them to default after a couple of years, then the lender gets the house back plus all the mortgage payments the buyer made. The guy at Countrywide Mortgage had a vanity license plate that said Fund M, which means give them a mortgage no matter what. It goes further than that. Investors packaged X number of the mortgages together in an investment instrument that was supposed to be low risk because it was backed by mortgages which had houses as collateral, called the Credit Default Obligation, CDO. A lot of big-time investors bought them, including investment firms, municipal governments and pension plans. Then when people started defaulting en masse, the price of houses plummeted. People with upside-down mortgages, owed more than the house was worth, walked away, so it snowballed and the value of these CDOs plummeted, causing big problems for the investors who bought them. Some of these investors had borrowed money to buy these investments because of greed, because they thought real estate prices would always go up, but now had to pay back their loans which they couldn't, so they went bankrupt. The collapse happened when more people defaulted than they thought would, which caused the price of houses to go down en masse, such that a lot of people who owed more on their houses than they were worth defaulted too. The subprime mortgage lenders were cooking loan applications any way they could, such that the applicant's income went up on paper in order for him or her qualify for the mortgage. They got the mortgage which they managed to pay on for a few years, but then many of these people who were in over their heads at the outset couldn't make the monthly payments, so they got foreclosed on and kicked out of their houses. Contrary to the myth that mortgage lenders don't like foreclosures, this is not really true, because they pocket what the first guy paid monthly and now own the house again. I saw one real estate auction where a big mortgage company was auctioning off all their foreclosed properties while simultaneously offering mortgages to the new crop of people there to buy them. Either way they win. If someone pays the mortgage off on time, they've made over 3 times the loan they give out. If they default, they keep the house and all the payments so far and simply resell it to repeat the process. Predatory mortgage lenders don't mind giving mortgage loans to people who don't really qualify because of poor credit and low income in return for higher fees and interest rates. Then somewhere down the line, when the person defaults, they get the house and the equity this person built up in it. Predatory lenders caused the collapse of the real estate industry because they didn't foresee that there would be so many foreclosures that the price of houses went down en masse. Banks and other investment companies who invested in mortgage loans were left owning a bunch of houses that had lost a lot of value with very little money to cover their own debts. CountryWideHomeLoanSucks.com. This website tells my story of unfair business practices with Countrywide Home Loan. Credit.com/credit_information/mortgages/subprime-loan-sharks.jsp en.wikipedia.org/wiki/predatory_mortgage_lending en.wikipedia.org/wiki/subprime_lending hud.gov/offices/fheo/lending/subprime.cfm. Chapter 2. Loans 2. The worst loans. Some loans are geared to entice the desperate. They cost so much that it's not really worth it. Layaway is no good because the company could go out of business, you could give up on it, whereupon you get nothing back and you get no interest on the money while you are paying the product off. You don't get the product until you've paid it in full. Rent to own is a sucker deal. You make low weekly payments in order to get a TV, a DVD player or whatever it is, and you think it's a pretty good deal, but people who have calculated out rent to own deals found that in the end, some people paid up to 3 times what the product was worth. Credit unions generally offer the best terms for a loan, followed by banks. After that, it's all downhill. Finance companies charge high interest rates and have expensive penalties for missing payments. Debt consolidation loans are marketed as a way to simplify your life, but what they do is to charge a higher interest rate and set the term for longer, such that in the end, you pay far more interest than if you didn't get the loan. If you go through a non-profit credit counseling agency as opposed to a commercial business, they work for the creditors, so they may try to get you a good consolidation loan in order to get you to pay something rather than defaulting. Pawn shops. You bring something there like a TV. They give you $20 or so. You have the option to come back in the future to reclaim it for the $20 plus a fee, or you can leave it there and they'll keep it. Sell it yourself through an ad or through eBay.com. Payday loans. You take out a loan promising to pay it back plus a fee and interest. Tax refund loans are a waste. They charge a hefty fee in order to get your tax refund a few weeks early. You can e-file and request your refund by bank transfer. It will come quickly. 401k loans. If you've been saving money in a 401k account as part of a retirement savings plan, and all of a sudden need the money, you can dip into it in one of two ways. Take a loan on it which you pay back. Take the 10% early withdrawal penalty and simply take the money. Simply ask for a loan on it. The 401k administrator gives you a form which you fill out and should get the money quickly. On some 401k's, you can apply for a loan on the internet. Because it is a loan secured by your own assets, the interest rate should be relatively low. If you pay the loan back, there will be no early withdrawal penalty, but if you don't pay it back, there will be an early withdrawal penalty of 10% plus. Since that money is now considered a part of your income, you will have to pay income taxes on it when you file your return. The Internal Revenue Code controls the procedure for loans against the assets in a 401k, but on a practical level, the Human Resources Department of your company should be able to manage it for you. Because this money is income, you owe IRS taxes on it. Automated loan machines /ALM. Automated loan machines are being placed in financial institutions, large retail outlets and shopping centers. ALMs allow credit-worthy consumers to obtain small loans in amounts ranging from a few $100s up to a few $1,000s without having to face a loan officer. Generally, the interest rates are the same as for conventional loans. To use an ALM, you provide identifying information, such as credit card numbers, driver's license number, address, telephone number, and the dollar amount you want to borrow. The ALM verifies the information. You provide information on income and employment. If this meets the lender's requirements, the ALM electronically obtains your credit report. The ALM applies the lender's credit requirements to the application. If your loan is approved, you select a repayment option that fits your budget. You read documents pertaining to your loan on the screen, then sign them with an electronic pen. The ALM prints the loan documents. You have the option to receive a check or an electronic deposit in your account. Brokerage account loans. A brokerage account is an account with a brokerage firm that sells stocks, mutual funds, bonds, etc. If you have such an account, you might choose to ask for a short-term loan using your stocks and bonds as collateral rather than liquidating your investment instruments. Just ask your brokerage firm about it. There will be interest on the loan. You fill out a form with your brokerage company with an agreement to pay the loan back at a certain rate of interest. If you don't pay the loan back, they take the value out of the stocks you own. They control your stock. There is nothing you can do to stop them. The biggest reservation the brokerages have is whether the stocks you own are good or bad bets to go up. If the brokerage thinks you own bad stocks, they could refuse you the loan. They prefer that you own stable stocks traded on the big exchanges as opposed to penny stocks sold OTC. You can also get a line of credit loan on your securities which will make a certain amount of money available to you if you need it at any point in time. The interest rate might not be fixed. On a fixed rate loan, the interest rate is tied to the prime rate and set for the loan. On a revolving line of credit loan, the interest rate moves up and down as the prime rate moves up and down. An advantage of this type of loan is that there should no fees that are common with other types of loans. It's a straight collateral loan. Car title loans. In poor areas in some states, there are car title loan shops which could be a part of a pawn shop which will lend somebody strapped for cash about 1/3 the blue book value of their vehicle provided they sign the title over in case of default and pay outrageous interest rates like 20% monthly, not yearly. This adds up to 200+% a year. Many poor folk get these loans then end up paying double the loan value then miss a payment whereupon they will come and take your car so you will lose twice. This advantage is that the loan is quick and easy. There are websites that offer this service as well. These car title loans are regulated by the federal truth in lending laws that require a disclosure of the interest rate and the exact amount of the interest. Check cashing/payday loans/short-term loans. For many low-income people who live paycheck to paycheck, payday loan stores have sprung up to provide quick cash for a fee to tie them over until payday. Basically, they offer very short-term loans for high fees. There are many critics of these loan services who say the working poor are being exploited with high fees and high interest rates, but the people using these services are thankful for it since they are too high risk to get a bank loan. Pawning something at a pawn shop is a hassle and loan sharks charge too much, so both sides are happy with these loan stores. Currently, loan stores are not regulated as financial institutions like banks because technically, they operate as a check cashing service only, a post-dated check cashing service, but regulators may impose some rules on them in the future. A payday loan only requires a bank account, proof of employment, paycheck stub, and identification cards. The customer gives the cash shop a post-dated check to be cashed in the future for the value he wants to borrow plus the shop's fee. He gets the cash today. In the future, about a week or two, the cash store cashes the check he gave them and gets their money back plus their fee. Most people go to the local brick-and-mortar store to get their cash. There is a web option where they direct deposit the cash into your account and you can withdraw it via ATM. The major advantage to this loan service is ease and speed with no invasive credit checks. The major disadvantage is the relatively high fee for such a short-term loan. These payday loans are also known as cash advance loans, check advance loans or post-dated check loans. You go to one of these places and write a post-dated personal check for the amount of money you want to borrow plus a fee. When you get paid, you either deposit your money into your checking account whereupon they cash your post-dated check or go into the store and extend the loan for another fee. Up until now, these payday loan stores have not been regulated because they have not been defined as financial institutions, so they are not subject to stringent disclosure and may try to snow unsophisticated customers with hidden fees. For example, one of the schemes is that they give you a small loan equal to about 40% of the car's value if you bring a car in for collateral, and in the fine print there is a clause that if you don't pay the loan back within a month or so, they will take legal possession of the car. Many people don't realize this, go back to pay the loan off late only to find their car is gone. At one place, the typical fee for $100 cash is 3% fee, $15 service fee, $1 per week per $100, up to 4 weeks. Because they label their transactions as check cashing instead of loans, these companies avoid credit laws, at least for now. These types of businesses go out of their way to make customers feel comfortable using their services, but if you did the math, you would realize that the interest rate, when stretched out to a year and not just a month, comes out to a highway robbery number. So I realize that money gets tight sometimes, but don't put yourself in a life situation such that you need to use one of these places. If you have to use them, compare the several check cashing services in your area looking for the lowest rate. Government regulators have generally said that these places are providing a service that nobody else wants to do. They are taking on high-risk clients and the monetary amounts involved are relatively small. If a person can't pay the money back on the due date, extra fees are constantly added on. Of course, the individual could default, but many end up paying several times the loan in interest and fees. Financial plan. Dead website, trydot-com, thoughtco.com, thebalancemoney.com/od/creditanddebt/a/paydayloan.htm, beware of payday loans, dangerous consumer ripoff. Knowerfee.org, you have the legal right to know your fee before you sign for a loan. Moneymutual.com, cashnetusa.com, new-york-payday-loan.com, mogomoney.com, digi-go.biz/payday-loan.html, easimonynow.com, moneygroupusa.com, personalloan.bz, loanbeforepayday.com, advancedpaydayloans.com, instantlyapproved.com, mycashnow.com, myonlinepayday.com, mypaydayloan.com, paydayselect.com, $10paydayloan.com, yespayday.info. Consumer finance company loans. Consumer finance companies are an alternative to banks and credit unions in getting a loan. They operate on the same principle as banks, but they often take rejects who applied for bank loans. Therefore, because their risk is higher, because their standards are lower, their interest rates are higher than for loans at banks. You apply for a loan just like you do through a bank, either online, in person or over the phone. They look at your credit score plus cash flow, money you have coming in, usually from your job, versus your regular bills, and based on that, decide how much cash they will offer you in a signature loan, which is a non-collateral loan based on your signature, which represents your track record so far in paying your bills and paying back money you borrow. Find consumer finance companies in the yellow pages and on the internet. The aggressive ones advertise on TV and in newspapers. Think of it as a risk versus reward game for them. They are willing to take risks on relatively small loans under $5,000 with people who have less than stellar credit ratings, but the trade-off is that the interest rates will be higher to compensate for the risk they're taking. Because there is no collateral involved, in order to protect their interests, some consumer finance companies require borrowers to buy credit life or disability insurance so that if the borrower gets into an accident, gets sick and can't work or dies, they will recover the amount of the loan. They often provide the insurance policy and combine it with the loan as part of it. Life insurance loans. If you have a whole life or universal life insurance policy, you can borrow money on it. You are essentially borrowing from yourself, and if you default, your benefactors will later suffer as a result of it. A term insurance policy, on the other hand, does not have this investment option that these other policies do. It is pure life insurance for a term and only pays if you die. Simply call up your insurance company and ask about it. Loan sharks. There are loan sharks in some of the bigger cities who have a reputation in the neighborhood as the place to go if you need cash. Of course, this is unregulated and illegal. They charge high interest rates and have muscle behind them, usually organized crime. If you don't pay, they either take your property or hurt you or your family. They do this because they have to keep a reputation as loan sharks. Military loans. Financing for military personnel. Loanmilitary.us. Loansmilitary.com. Pawn shop loans. Pawn shop loans are basic collateral loans. The pawn shop guy offers you X amount of money for something now with an option to return within a month or so to buy it back for the amount he loaned you plus a fee. If you don't come back to buy it back, he takes ownership of it and puts it out for sale. Don't expect much cash for your stuff. He'll easily give you 50% less than its retail value, probably less than that. You can pawn anything that has monetary worth that someone is likely to buy. Any common item that people want are good to pawn, like video games, electronic components, tools, jewelry, computers, sporting goods, and musical instruments. Some pawn shops take vehicles as well. These deals are called title loans. In a pawn deal, after the pawnbroker sets the price and you decide to accept, he or she will give you a pawn ticket which states the cost to redeem the item and the interest rate on the loan. Pawn shop loans are generally for a term of 1 to 6 months with a high interest rate. Some state governments put limits on the interest rate. Others don't. After the loan period ends, if you have not returned, the pawnbroker will sell off your items. Rather than the hassles of a pawn, it might be easier to sell whatever it is you're trading for cash. Find pawn shops in the yellow pages. Pension loans. Pensions are not easy to get money out of in advance in the form of a loan using your pension fund as collateral. The only way I know of is if you quit or are fired before you are eligible for permanent monthly payments, at which point you will get a lump sum severance based on all the money you contributed into it so far, which is subject to income tax. Tax refund loans. When you get your tax return done by an established tax preparation company, they offer a service where they will give you cash now in lieu of the tax return money you are due in the future for a fee. A tax refund is really only money you're getting back that your employer withheld from your paycheck for the tax man, and during the course of the year, he withheld too much, so now you're getting it back. It's not like the IRS is giving you money. It was your money all along. Go to a professional tax preparation service where they fill out your income taxes. If you want cash now, tell them. They will give you cash and you sign away the tax return money to them. The biggest disadvantage is the fees you're paying to get your money early. HRBlock.com. IRS.gov. Veterans loans. There are low-interest loans available for veterans offered by state veterans departments. You must the eligibility requirements of being a veteran and also be a resident of the state where you are applying. Apply through the state veterans office in your state. Your state government may or may not have one of these programs. The advantage of one of these loans is that the interest rate will be lower than for a conventional loan and it will probably be easier to get. The major disadvantage is the bureaucratic red tape and the time involved. These state loans are not the Federal Veterans Administration loans that veterans can get to buy homes or refinance existing VA loans. NASDVA.com, National Association of Veterans. tvc.state.tx.us/states.htm, state veterans offices. Get loans when you have almost nothing. If you're a crafty bugger and have a good credit record, you can apply for 6 or more small loans at different banks, but you have to do it all in the same day so the other loans are not on your credit record. When lenders check against your credit record, there will be no record of other applications other than the application you are making with that particular bank. For this method, with $500, you open up a savings account at Bank A, then go to Bank B and ask for a loan using the bank account from Bank A as collateral. If they say why don't you just use that money, say I'm trying to build my credit rating up by getting a loan and paying it off in time. If they give you the loan, deposit the money in a new account at their bank, then go to Bank C and apply for another loan. Do this for 6 banks, pay the monthly loan fees off and you will have a good credit rating within 6 months. With this first-class credit rating, apply for a credit card from these 6 to 10 banks with which you have already set up simple bank accounts so that they know you. If you want your credit limit to go up, make small purchases, then pay promptly every month. Once they see you are conducting your account in a satisfactory manner, increasing this limit will not be difficult. After several months, ask for a raise in credit limit. The worst that can happen is for them to refuse or suggest you continue with the credit card for a further period, after which they will review your limit. Once the credit limits go up on each card, you can borrow all that money on each card to finance your business or do whatever you want. Chapter 3. A Social Lending Guide. Peer-to-peer lending / social lending / person-to-person loans / P2P loans / lending club. With peer-to-peer loans, you don't get a loan from a bank or financial institution. You get a loan from a group, a small company or an individual. The process is the same. They check your credit and possible collateral. Most of them are out to make a profit. There are very few non-profits around offering microloans. There are P2P websites where you put your situation and a credit report up and a stranger might give you a loan that is not a gift. It's a legal loan. If you default, it will go on your credit record. Get a loan through alternative lenders for a lower interest rate than the banks charge. Lenders bid to give you the loan at the lowest interest rate possible. en.wikipedia.org/wiki/person-to-person_lending. EASYP2PLOANS.com. FINAID.org/loans/peer-to-peer.phdml. kwik-loan.com/p2p-loan.xhtml. Lendfriend.me. Lendingclub.com. Lendingsoceoli.com. p2plendingnews.com. p2p-loan.paydayfastcashin.com. p2p-loan.paydayloancheap.us. p2p-loancorp.com. p2p-loans.com. p2p-loans.com/blog.html. p2p-militaryloans.com. p2pwealth.com. peer-lend.com, peer-lend.com, peerlendingloans.com, peerlendingnetwork.com, peermint.com, Canada, Australia, and New Zealand. peer-to-peer-loan.com. Personal loan, lending money to family and friends. If you learned the hard way by trusting people or simply watching a lot of court TV, the first thing you know is never lend a substantial amount of money to a friend or family member unless you intend to lose it. The bottom line is simply that most of those debts never get paid as the borrower floats through daily life and starts to avoid you more and more. Of course, if it's meant to help a close family member, go ahead, give them the money. After all, it's only money, but if your old pal from school needs $500 to put a down payment on a motorcycle or has the nerve to even ask you for several thousand for a down payment on a house, don't do it unless you're prepared to lose it. These people will often try to make you feel guilty, but don't fall for it. Just look them in the eye and tell them that you have learned from experience never to lend money to anyone, and that's it. It's no reflection on your character as a good person. You're just wise. If you're still a sucker, make it legal, sign a contract with witnesses and maybe even a lawyer present. When you end up suing your ex-friend later, even if you win after all the hassle, there's a good chance you will never recover because he simply won't pay the judgment. The law can't do much about seemingly trivial civil matters, so take a word from the wise, don't lend money even to your best friend. He's got to carry his own cross just like you do. articles-p2p-loans-how-how-to-how-how-with-structure-how-personal-loans-with-people-you-know-how-no-2417375.html. personalloanportfolio.com. virginmoney.com, they make a professional contract on a loan between friends and manage the collection of it. virginmonews.com, managing loans between family and friends. Chapter 4. Loan websites. Loan scam websites / predatory loan websites. The big scam is the home equity loan. You can't pay it back. They take your house. Loansharks.com, loan sharks and predatory lending. responsiblelending.org, predatory loan warnings. directlendingsolutions.com/loan_scam.htm. Loan websites. 1. Books about loans are at number 332.74 or HG 3755-56 at the library. 1000bestlenders.com. 1loansusa.com. 24approve.com, 888-24 approve, Second Chance Auto Loans. 4instantcancashloans.com. 800anycredit.com, 800 any credit. A1-online-loan.com. abcloanguide.com.